Maybank booked a 12% increase in its latest quarterly profit on the back of higher operating income and lower allowance for impairment losses on loans. The country's largest lender by assets said third quarter FY 2023 earnings rose to 2.36 billion ringgit, while revenue grew 23% to 16.01 billion ringgit. No dividend was declared for the quarter under review. At the end of September, the bank's total assets hit the 1 trillion ringgit mark for the first time, compared to 945 billion ringgit as at end December 2022. Group President and CEO Datuk Khairul Saleh Ramli said the group will continue to pursue opportunities for growth, guided by its corporate strategy across all of its customer and business segments within its ASEAN operations, while maintaining its strong liquidity position, improving asset quality and preserving sound capital levels. He said Maybank aims to continue bringing about a positive impact to the communities it serves, in line with its purpose of humanizing financial services. Barring any unforeseen circumstances, the lender is targeting a return on equity between 10.5% and 11% for FY 2023. AMMB Holdings saw its second quarter FY 2024 net profit jump 10% to 469.78 million ringgit, as write-back of provisions and lower loan impairments more than offset the weaker operating profit in the quarter. This is its highest quarterly net profit attributable to equity holders since the fourth quarter of FY 2015, when it posted earnings of 519.22 million ringgit. Revenue contracted by about 4% to 1.12 billion ringgit. The banking group declared a dividend of 6 cents per share. For the first half of FY 2024, AMMB's net profit was 1.3% higher at 848.15 million ringgit, while revenue stood at 2.33 billion ringgit. Outgoing AMMB Group CEO Datuk Sulaiman Mohamad Tahir, who will retire tomorrow, said the lender delivered a resilient set of first-half results and that it had continued to strengthen its capital ratios and regained its AA2 credit rating by RAM Ratings. He said the group is optimistic that growth of the Malaysian economy will continue to be solid in the second half of FY 2024, driven by domestic demand despite the current volatile global financial markets and continued geopolitical tensions. Support for Prime Minister Datuk Sri Anwar Ibrahim has fallen after less than a year of being in power, Bloomberg reports, as concerns over the economy dominate voters' minds. Citing a poll by the Merdeka Centre for Opinion Research, the report said his approval rating has dropped to 50% from 68% in December. The poll, which was conducted last month, also showed dissatisfaction over the government's handling of the economy climbed to 43% from 19%. The ruling coalition's rating has declined to 41% from 54%, with 78% of voters citing economic concerns as the biggest issue that they face. The report notes that even though Anwar has a supermajority in parliament that no Malaysian leader has obtained since 2008, he has spent his first year being tentative about undoing hefty subsidies and broadening government revenue, unpopular measures that were seen necessary but tricky amid political volatility and rising right-wing fundamentalism. Merdeka Centre was quoted as saying that the survey reflects the expectations held by the electorate on the administration to regenerate economic growth as well as address long-standing anxiety over inflation and tepid wage growth. Boustead Plantations returned to the black in the third quarter of FY 2023, mainly due to improved oil extraction rate, reduced operating costs, and the favourable impact of fresh fruit bunch valuation. The increase in output was also attributable to better weather conditions, coupled with the return of a higher number of foreign workers. In a filing with the Bourse, the group said it booked earnings of 15.22 million ringgit against a net loss of 352,000 a year ago. Quarterly revenue was 15% lower at 202.55 million ringgit. Looking ahead, its acting CEO Fahmi Ismail said, despite the El Niño weather phenomenon, Malaysia's palm oil production is projected to rise on the back of an improved workforce and increasing maturity of palm trees available for harvesting. Meanwhile, Boustead Group CEO Izzadin Daud said he believes Boustead Plantations is currently moving on the right trajectory by focusing on operational improvements to enhance its long-term prospects. MAHB aims to reopen all of its retail space at KLIA by the first quarter of next year and 90% of the space by the end of this year. Acting CEO Muhammad Rastam Shahrum attended the opening ceremony of 2 Eraman duty-free stores by Malaysia Airports Niaga today. He noted that the vibrancy is coming back to the airport and expressed hope that this vibrancy will get KLIA back to its shine. MAHB is undertaking a major overhaul of the retail and F&B area at KLIA, which resulted in certain portions of the country's main air travel gateway to be dotted by shopfront hoarding, even though it has been 1.5 years since Malaysia reopened its borders. It is unclear what the latest percentage of outlets that stay unopened to date is, and if these outlets are generating rental revenue to the group. As for Eraman, Muhammad Rastam said the duty-free business has already returned to profit with passenger recovery at KLIA.